How's it going, everyone? It's Sam. Almost everyone is losing their shirt this year in the market. And it doesn't seem like that probably for you because you are most likely outperforming the market. But right now, I'm going to show you a lot of companies are down significantly. We're talking 1-year lows, multi-year lows, 5-year lows, 20-year lows on some of the biggest companies out there. We're going to talk about that and talk about crypto, talk about some things that are happening right now and are coming very soon. If you don't mind, hit subscribe, turn on that bell notification underneath the video. And if you want to get one of the best apps out there to track all your investments, be able to show in real time how much Bitcoin would I have if I just took my entire net worth, put it into Bitcoin or other cryptocurrencies, or maybe you're a big Tesla fan, how many Tesla shares could you buy? Fun things like that. Track your progress over time, track your net worth over time. Be able to have a lot of information at the touch of your fingertips, all in one place. Check out the link to Bagt Tracker AI underneath the video. This is an app that I'm building with a few other people to be able to figure out all that information because there's nothing out there that's good enough right now for crypto investors. So check out that link underneath the video. We almost have 200 people pre-registered. So all you have to do is hit the pre-register, put in your name, email, and then what you want to see in this app. And we're going to build it out here soon. Now, let's take a look at the market. So it might seem like a normal day for crypto, which it pretty much is. I mean, Bitcoin's down a little bit, right? Some people are worried. Bitcoin's down 2.5%. Ethereum's down 2%. It sounds rough, but when you compare it to the general market, it's nothing. The S&P 500 is down 1.44%. NASDAQ is down 1.73%. Dow Jones down 1.25%. This is just about the same as the crypto market, and it's supposed to be a lot less volatile, right? Bitcoin is supposed to be super risky, go up and down, huge swings, super risky. Dow is supposed to be the most boring index out there, and it's down 1.25% today. So honestly, crypto isn't looking that bad. This is at a time where we hit extreme fear on the fear and greed index. This is the traditional markets. So that is scaring a lot of people. And if you go to the Dow Jones, it's actually down for the year. It's red. Everyone thinks this is an awesome year, the recovery year after a hard 2022. And that's the case if you're in a select few equities or if you're in crypto. But a lot of people are actually down on the year. The Dow is down on the year. Some specific stocks that are down, Vici, down 11.5% year to date. This is a company that I really like that I've been buying a lot more of, but continues to hit lower low after lower low after lower low, lower highs after lower highs. And this is a level that we haven't seen in over a year. We'd have to go back to 2020, maybe 2022 for a select few days to be able to see prices this low. And the company itself is actually doing really well. Now, other stocks are down significantly too. Realty Income, one of the favorite real estate investment trusts of Twitter and of YouTube, one of the best ones out there in a lot of people's opinion, is down to under $50 per share. I mean, this is basically where we were at COVID. The bottom of the COVID low that I can see on the day here is $42. We're within 15% of that. That's crazy. Go back to Walgreens. Walgreens is down 70% in the past 5 years. Actually, just almost exactly 69% over the last 5 years. Imagine it's 2018 and you put some money into Walgreens. You think, oh, it's a good dividend payer. They're going to be around for a while. People want their products. They're not willing to wait a day or two for Amazon because people are going to get like cold medicine, stuff like that, pharmacy items. And then it goes down 70%. Continuing to see lower lows, lower highs. The dividend yield is 8.5%. A lot of people get tricked into buying companies because they have a high dividend yield. If this doesn't come back, this could be a massive trap, and they might just decrease this dividend. I don't think they can continue to pay 8.5% at this point. I could always be wrong. Other companies like Ford, you have to go back even further. They were at $40, I guess $35, $32 back before 2000. Now they're at 12. Imagine putting money in 25 years ago and now being down 62%. It's unbelievable. Now, they're having problems of their own, right? GM, Ford have to furlough or fire a bunch of workers. They have to put a lot of their plans on hold for the EV transition. They're becoming less profitable because of this. They're also going to have to pay workers more, at least until they automate. Most likely they'll start to automate at some point. And Tesla is lowering prices, lowering the cost of building the vehicles all the time. And Tesla is one of the few select names that's actually up on the year, 130%. Now, keep in mind, they were beaten down last year. A lot of the assets that are doing so well this year were beaten down a lot last year. And that's definitely helping them. A lot of people want to be in higher growth names. And that's the interesting thing right now. Last year, we had dividend stocks do really well. A lot of them did well. But this year, you can't get people to buy these because they realize, hey, if I buy this and the Fed starts lowering rates, first of all, we're going to have a large amount of people going to invest into high growth names because you want to be in higher growth if rates are low. And then second of all, you're also going to see these companies continue to just give, decent returns, not great returns. Some of them are actually like dying off. Some of them are losing market share. So I really want to be in things that are going to grow if we have another boom time. I don't want to be getting a dying business or slowing business and invest there. I want to invest in something like Tesla, Google, Nvidia, those types of companies. Now, on the other hand, if you can find a good company, like Vici, in my mind, is a good dividend company, and you get a nice 6% dividend yield right now, and there are investors that are going for fixed income right now that are just in treasury bonds and savings accounts because they can get close to this without having the market volatility. If you can get this at the right time and we start to go to lower rates, if you're in a good company, you can get a nice dividend yield and it will probably pop afterwards because people will flood back into these as opposed to keeping it in treasuries and savings accounts. So there's that fine line. You want to be in good companies that aren't dying off, that maybe pay a nice dividend yield, but you want to make sure that they're actually going to do well when we lower rates still, that they're still a good company and not just a high dividend yield. Now, it makes sense that a lot of these companies are down when treasury yields are going up so much. I mean, the 2-year treasury is at 5.12%. The 30-year treasury at 4.81, spiking over the last couple of weeks. So I get why some investors are buying treasuries. I get it. I've said this many times, though, that I understand that some people need to allocate towards treasuries, towards savings accounts. But if you are a long-term investor, looking more than a year or two down the line, you probably want to be allocating towards good quality companies that are continuously growing, that have strong moats, because this will give you 10 to 30% annualized rate of return. I realize there's a big difference there, but companies like Tesla, Google, Amazon, Nvidia, those types of companies will continue to grow substantially, but a treasury or a savings account will lower their rates at some point. So you need to be careful because you could get 5%, 5%, 4%, 3%, 2%, and all the assets that you want to actually buy could be up 50 to 100% by then. Now, this is the same thing for cryptocurrency, right? A lot of people looking at cryptocurrency right now, wondering, should I buy now? Should I buy before the next bull run? Should I just wait? Will we get one final crash? Honestly, I couldn't tell you what we're going to do. But we are in neutral right now, slightly neutral, a little bit more bearish than neutral. But when you look at the overall market, we still are down a lot. We're at almost $3 trillion, 2.8 trillion. Now we're at 1.1. The volume has fallen a lot. I think this is a decent time to be allocating. Of course, it's the same thing with stocks and crypto. You can't try to time it perfectly and assume that if you buy right now, it's never going to go lower. Just assume if you buy that it will fall lower, and then you'll buy again. You have to be comfortable with how much you're buying, but also probably have some on the sidelines in case you want to buy some more, so that way you don't go crazy when we do inevitably fall 5, 10, 20%, maybe in a day or two. But I think when you look at this, it makes sense why people are moving to treasuries, but for me, it doesn't make sense to go hard into treasuries or into savings accounts. I have money in savings accounts, but I'm consistently buying quality assets that I want to buy more of, and I want to hold for 5, 10, 15, 20 years. Now, we do have a couple big events happening this week, and then especially next week. So Wednesday, we have ADP employment. Thursday, we have initial jobless claims. So obviously there's going to be some worry about, oh, is the economy overheating? Are we falling into recession? You have to walk that tight line. But then next week we have initial jobless claims again. But we have CPI and core CPI, something that a lot of people like watching. That's on Thursday. Then we also have PPI and core PPI on Wednesday. So Thursday and Wednesday, both important days to watch. Then the following week, we have more big news, GDP revisions, pending home sales, personal income, PCE index, core PCE. And then we're going to get earnings as well the following week. So there's a lot going on over the next couple weeks. I would make sure that you're tuned in. Let me know your thoughts on all this underneath the video, and definitely check out Bagt Tracker AI. I think it's one of the best. I think it's going to be the best net worth tracker out there. That's why we're building it, because we want it to be the best, and we think we can build that. So check that out, pre-register. Thank you so much for watching. I appreciate it, and I'll see you in the next video. Bye.